In this video, I am going to explain the different methods of valuation of goodwill. So first let me explain the basic concept of goodwill. See, goodwill is an intangible asset. Okay, goodwill means the good name or reputation of the organization. Goodwill is not generally recorded in the books of accounts, even though it does exist in a business firm. In fact, goodwill should not appear in the books of a business unless it has been purchased or paid for. And second thing is, it is necessary to bring it into books of accounts in connection with admission of a new partner or retirement or death of an existing partner. So these are the various circumstances where we need to prepare or find the value of goodwill. So goodwill is an intangible asset since it cannot be seen or felt. But sometimes goodwill is more valuable asset than the tangible asset. Okay, so there are different methods are available to calculate or to value goodwill. So here I am going to explain three basic methods. The first one is average profit method, second one super profit method, and third one capitalization method. So under average profit method, again two subdivisions are there. First one is simple average, second one weighted average. Under super profit method, four methods are there. Year of purchase of super profit, sliding scale valuation of super profit, capitalization of super profit, annuity method. So these are the four different methods which comes under super profit method. And the last one is capitalization method. Now I am going to solve different problems in order to understand each and every methods. See the first one, average profit method. Under average profit method, two subdivisions are there. Simple average, weighted average. Let us see the problem for simple average and weighted average. See, valuation of goodwill. First method is average profit method. Look at the problem. The following details are available about the business of Navy Limited. Profit for 2010 1 lakh, 2011 1 lakh 25, 2012 1 lakh 40. Profit of 2010 have been reduced by 15,000 because goods were destroyed by fire. It is an unusual expenditure. So we need to add 15,000 along with this value. Why? Because it is an unusual expense. So we need to add this amount along with the profit for the 2010. Next point, non-recurring income of 10,000 is included in the profit 2011. In 2011 profit, 10,000 rupees is included with this, which is non-recurring. So if there is any non-recurring income, it should be subtracted from the profit. So we need to subtract this amount from 1,25,000. And next one, profit of 2012 included 10,000 income on investment. So income of investment also, it's a non-recurring. This income is not from the business income. So it is other sources. So if there is any non-recurring income, that should be subtracted from the income. So 10,000 will be subtracted from 1,40,000. Next one, goods have not been insured, but it is thought prudent to insure them in future. The insurance premium is estimated at 750 per year. So this expense is not included in the above 3 years profit. In future they are going to take insurance policy. For that they are going to pay 750 as insurance premium. So this will be expense, recurring expense. So this will be subtracted after finding the average profit. Okay, next one, reasonable remuneration of the proprietor of the business is 12,000 per year, but it has not been taken into account for calculation of above mentioned profit. So this is also future expense. They are going to charge or they are going to pay 12,000 per year for remuneration of the proprietor of the business. So this will be subtracted from the average profit. So these are the two expenses which is not included in the above 3 years profit. So in future, after finding the average profit, we need to subtract 750 and 12,000. Then we can able to find out the adjusted average profit. That is adjusted average maintainable profit. So we need to calculate that first in order to find out the goodwill. So they ask you to calculate goodwill on the basis of 4 years purchase of the average profit of last 3 years. So first method is average profit method. So formula for goodwill is average maintainable profit into number of years of purchase. So number of years of purchase, this information will be given in the problem. Only you need to find out the average profit. See, If nothing is given regarding adjustment means you can directly take the total profit for 3 years and divided by 3 you will be getting average profit. Then after finding the average profit you can multiply with the number of years of purchase. So look at this problem. Calculation of goodwill on the basis of 4 years purchase. How many years? 4 years of purchase. Okay, so number of years of purchase is given. So first thing you need to find the average profit, then multiply with the number of years of purchase. Then you can get the goodwill. So but in this problem we have some adjustments regarding non-recurring income and non-recurring expense. If there is any non-recurring income or expense, that will be adjusted with the profit in order to find out the average maintainable profit. Calculation of average maintainable profit. Look at the problem. Profit 2010 how much? 1 lakh, and adjustment is there regarding 2010, that is profit of 2010 have been reduced by 15,000 because goods were destroyed by fire. It is an unusual expense. So we need to add unusual expense along with the profit in order to find out the maintainable profit for the future. So 2010 profit how much? 1 lakh. Add unusual losses. How much? 15,000 unusual loss due to fire. So add along with this. Now 1,15,000 profit for 2010. In the same way for next year 2011. 1,25,000. Just find any adjustment regarding 2011 here. See, non-recurring income of 10,000 is included in the profit of 2011. I told you no. If there is any non-recurring income, that will be subtracted in order to find out the future maintainable profit. That is 10,000 is included. No, just subtract this value from 125. 1,25,000 minus non-recurring income. Balance 1,15,000. In the same way for 2012 also. In the 2012 profit 1,40,000. Adjustment regarding 2012 is here. Profit of 2012 included 10,000 income on investment. So this is also non-recurring income, that is a non-operating income. This income is from outside. This is a non-operating income. This is not from the business. So this income from the outside business. So it is called as a non-operating income. This will be subtracted from the profit. 1,40,000 profit minus non-operating income. That is any income from outside is called non-operating, which is not from the business. So how much? 10,000. Balance, subtract. Balance 1,30,000. Now get the total income for 3 years. 3,60,000. This is a total income for 3 years. That is total profit. Now find the average profit. Average profit is equal to 3,60,000 divided by 3 is equal to 1,20,000. So this is the average profit. Now we need to find out the average maintainable profit. So in order to find out the average maintainable profit, just see if there is any future expense that will be subtracted from the average profit. Look at the problem. Goods have not been insured, but it is thought prudent to insure them in future. So the insurance premium is estimated at 750 per year. So this expense they are going to incur in future. So this will be subtracted from the average profit. Less insurance premium. How much? 750 per year. In the same way, a reasonable remuneration of the proprietor of the business is 12,000 per year, but it has not been taken into account for calculation of above mentioned profit. So in future they are going to make payment to proprietor for remuneration, that is reasonable remuneration. So 12,000 rupees, no, this will be subtracted from the average profit. Remuneration to proprietor how much? 12,000. So from 1,20,000 subtract 750 and 12,000. The total is 1,07,250. This is average maintainable profit. So now we got this value. No, just go for calculation of goodwill. Goodwill is equal to average maintainable profit. So what is the average maintainable profit? 1,07,250 into number of years of purchase. Look at the problem. So number of years of purchase is 4 years. Calculate goodwill on the basis of 4 years purchase of the average profit for the last 3 years. So number of purchase how many years? 4 years. Number of years of purchase 4 years. Multiply 1,07,250 into 4, 4,29,000. That's all. So goodwill value is 4,29,000 according to average profit method. The formula is average maintainable profit. If there is any adjustment, we need to find average maintainable. If nothing is given regarding non-recurring income or non-recurring expenses, directly you can find simple average profit. That is, you can easily find the average by adding all the profit divided by number of years. Then you can multiply with the number of years of purchase. The next method is weighted average profit method. See, the profit of Abdul Limited for the last 5 years were as follows. So 5-year profit is given 2010, 20,000, 11, 22, 12, 25, 13, 28, 14, 30,000. Compute the value of goodwill of Abdul Limited on the basis of 4 years purchase of the weighted average profit after assigning weights of 1, 2, 3, 4 and 5 serially to the profit. See, according to weighted average profit, here the weights will be given for each year profit. So for the first year 1, second year 2, third year 3, fourth year 4 and the last year 5. So these are the weights which is given in the problem. Only thing we need to find the weighted average and multiply with the 4 years purchase. That is number of years of purchase is given in the problem. So let us see the solution. See the formula for weighted average method. That is goodwill is equal to weighted average profit into number of years of purchase. So number of years of purchase is given in the problem. That is 4 years. Now we need to calculate weighted average profit. I told you weights is given for each year. We need to find the weighted average profit. Look at this calculation. Calculation of weighted average profit. So 5 years profit is given in the problem. Weights also given for each year. Now you need to find the product. So in order to find the product, just multiply annual profit into weights. 20,000 into 1, 20,000. 22 into 2, 44,000. 25 into 3, 75. 28 into 4, 1,12,000. 30 into 5, 1,50,000. Now get the total product 4,01,000 and total weights 15. That is 1, 2, 3, 4, 5, total 15. Now find the weighted average profit. Weighted average profit is equal to product divided by total weight. 26,733. Okay, so this is the weighted average profit. Now multiply with the number of years of purchase in order to find the goodwill. Goodwill is equal to weighted average profit is 26,733. Number of years of purchase is 4, which is given in the problem. So what is the value? 1,06,932. Weighted average profit into number of years of purchase is equal to goodwill. First method, average profit method, is over. Now let us see the second method, super profit method. In that, first one is year of purchase of super profit. Let us see the problem for this. Look at the problem. Purchase of super profit method. A firm earned net profit during the last 3 years as follows. 2012, 13, 14 is given. The capital investment of the firm is 1,50,000. So capital investment is capital employed. Okay, second one is a fair return of the capital have regard to the risk involved is 10%. That is NRR is given 10%. Calculate the value of goodwill on the basis of 3 years purchase of super profit. So let us see the solution for this. According to purchase of super profit method, in order to find out the goodwill, there are 4 steps steps are there. First thing, you need to find the average expected profit. Just find the total profit divided by number of years. You will be getting average profit. And after finding the average profit, the next step is you need to find the normal profit. So formula for normal profit is capital invested, that is capital employed into the organization, into normal rate of return, that is NRR. You will be getting normal profit. And after finding the average expected profit and normal profit, then find the difference, that is super profit. Super profit is equal to average expected profit minus normal profit. The above two calculations we have found, no? So the difference between these two things is called super profit. And after finding the super profit, just multiply number of years of purchase with super profit in order to find the goodwill. So goodwill is equal to super profit into number of years of purchase. First calculation is calculating average expected profit. Take the total profit divided by number of years, 3. Total profit, first year 40, second year 45,000, third year 50,000. Divided by number of years, 3 years. So what is the average profit? 1,35,000 divided by 3 is equal to 45,000. Average expected profit is 45,000. Then go for normal profit. Formula for normal profit is capital employed into NRR. So capital employed how much? The capital investment of the firm is 1,50,000 and NRR is 10%. So normal profit is equal to capital employed into normal rate of return. Capital employed 1,50,000, NRR 10%. 15,000. We have got average profit and normal profit. Now we can easily find the super profit. Super profit is equal to average expected profit minus normal profit. Average expected profit how much? 45,000. No. 45,000 minus normal profit how much? 15,000. So what is the difference? 30,000. So we have got super profit. Goodwill is equal to super profit 30,000 into number of years of purchase. So calculate the value of goodwill on the basis of how many years? 3 years purchase of super profit. So number of years of purchase is 3 years into 3. So goodwill amount is 90,000. Next method is sliding scale valuation of super profit method. This method of valuation of goodwill is a slight variation of the purchase of super profit method. Say, instead of multiplying the whole super profit by a certain number of years, a grading scale is adopted. For example, instead of multiplying the total super profit into total number of years of purchase, we can divide in this way. First 10,000 into 3 years, second 10,000 into 2 years, third 10,000 into 1 year. Then we will be getting 60,000 as total goodwill. Next method is capitalization of super profit method. Let us see the problem for this method. Capitalization of super profit method. See, the average net profit of a business as adjusted for valuation of goodwill amounted to rupees 2,50,000. So average adjusted profit is 2,50,000 is given in the problem. The net tangible assets employed were, or the value is 20 lakhs. So net tangible assets also given how much? 20 lakhs. Assuming that 10% represented a fair commercial return. That is the NRR is 10%. Normal rate of return is 10%. So these are the information is given in order to calculate the goodwill according to capitalization of super profit method. See, calculate the amount of goodwill by capitalizing super profit. Capitalization of super profit method. So according to this method, the goodwill formula is super profit divided by NRR. So first we need to find the super profit. So what is the formula for super profit? Average profit minus normal profit. We need to find average profit and normal profit. Then the difference between these two is called super profit. So average profit is given in the problem. How much? See, the average net profit of the business is 2,50,000. So average profit is given 2,50,000. So average profit is given in the problem itself. Now you need to find the normal profit. So what is the formula for normal profit? Capital employed into NRR. See, the net tangible asset is called capital employed. How much? 20 lakhs. NRR is 10%. So capital employed 20 lakhs NRR 10%, 2 lakhs. Now find the difference. Average profit is 2,50,000 which is given in the problem. Normal profit is 2 lakhs. What is the difference between these two? 50,000. So super profit is average profit minus normal profit. Average profit 2,50,000, normal profit 2 lakhs. Difference 50,000. Now we have got super profit. Now you can apply the formula to find out the goodwill. So goodwill is equal to super profit, how much? 50,000 divided by NRR 10%. Answer rupees 5 lakhs. So according to capitalization of super profit method, goodwill amount is 5 lakhs. Okay, the next one is annuity method. From the following information, compute goodwill as per annuity method. See, these are the information. That is, first one is average capital employed is 15 lakhs. NRR is, that is normal rate of profit is 10%. Profit for 2012 1,75,000, 2013 1,60,000, 2014 1,80,000. 3 years profit is given. Profit for 2013 has been arrived after writing of abnormal loss. See, if there is any abnormal loss, that will be added back along with the net profit. Then for 2014 includes a non-recurring income. If there is any non-recurring income, it will be subtracted from the total income. After doing this adjustment, you can able to find out the average profit. Then goodwill is to be calculated on the basis of 3 years purchase of super profit. Okay, then the present value of annuity is ₹1 for 3 years at 10%. So these are the information is required in order to find out the annuity factor. So according to this problem, annuity value is given. You need not find annuity factor. So annuity factor is given in this problem. You can just apply this factor with the super profit in order to find the goodwill according to annuity method. This is the formula for goodwill according to annuity method. That is, goodwill is equal to super profit into annuity factor. Okay, so first we need to find the super profit. Okay, annuity factor is given in the problem itself. So first you need to go for calculation of super profit. So what is the formula for super profit? Average profit minus normal profit. Calculation of average profit. Look at the problem. For the year 2012, how much profit? 1,75,000. Just check whether any adjustment regarding 2012. So here two adjustment is given, one for 2013 and second one for 2014. So no adjustment regarding 2012. So directly you can take 1,75,000. For 2012, how much? 1,75,000. The same way, profit for 2013. Profit for 2013 1,60,000, but adjustment is given. Profit for 2013 has been arrived after writing off abnormal loss. I told you, if there is any abnormal loss, it will be added back along with the net profit. 15,000 will be added. Add abnormal loss. Profit for 2013 1,60,000 plus abnormal loss 15,000. Total 1,75,000. Profit for 2013. In the same way, profit for 2014. How much? 2014 how much? 1,80,000, and adjustment is there. Profit for 2014 includes a non-recurring income. If there is any non-recurring income, it will be subtracted from the profit. 1,80,000 minus non-recurring income. How much? 20,000. Balance 1,60,000. That's all. Now find the total. 5,10,000. Okay. Now find the average profit. 5,10,000 divided by how many years? 3 years. So 1,70,000. Average profit is 1,70,000. Now enter. Super profit is equal to average profit minus normal profit. Average profit is 1,70,000. Then you need to find normal profit. Calculation of Normal profit. What is the formula for normal profit? Capital employed into NRR. Okay, see, average capital employed is 15 lakhs. You can take either average capital employed or capital employed. Both are same only. So, average capital employed how much? 15 lakhs. NRR is normal rate of profit is 10%. 15 lakhs into 10%. What is the answer? 1,50,000. Normal profit is 1,50,000. So, super profit is equal to average profit minus normal profit, that is 20,000. Now go for goodwill calculation. So goodwill is equal to super profit into annuity factor. Super profit is 20,000 into annuity factor. Just look at the problem. 2.4868. 2.4868. 49,736 according to annuity method. See, according to annuity method, if the annuity factor is not given in the problem means there is a separate formula to calculate this. See, the present value of annuity of rupee 1 for 3 years at 10%. Let me show how to find this value. This is the formula, that is 1 minus 100 divided by 100 plus R. R means rate of percentage. N denotes number of years. Number of years is 3 years divided by rate, that is 10% divided by 100. See, 1 minus 100 divided by 100 plus 10%. 10. How many years? 3 years. 3 divided by 10%. Answer is 100 divided by 110. That is 1 minus 100 divided by 110 power 3 divided by 10 by 100. Answer is 2.4868. In this way, you can able to find the annuity factor. So far we have discussed average profit methods, super profit method. Let us see the last one, that is capitalization method. Capitalization method. A firm earned 1,50,000 as its annual profit. The rate of normal profit being 10%, that is NRR is 10%. The assets of the firm amounted to rupees 16 lakhs and liabilities 5,20,000. With this information, they ask you to find out the value of goodwill by capitalization method. See, according to capitalization method, the formula for goodwill is total capitalized value of the business minus net assets of the company. So here you need to find two things. One is total capitalized value of business and net asset. The difference between these two is called goodwill. So there is a separate formula for this one. Total capitalized value of business is equal to actual profit divided by NRR, which is given in the problem itself. So just take actual profit divided by normal rate of return to find out the total capitalized value of the firm. Next one is net asset. Formula is total asset minus liabilities. You can get the net asset. So first find out this one. A firm earned 1,50,000 as its annual profit. The NRR is 10%. Total capitalized value of the firm is actual profit divided by NRR. Actual profit 1,50,000. NRR is 10%. Answer is 15 lakhs. After finding this, next calculate net asset. Formula is total assets minus liabilities. The assets of the firm amounted to rupees 16 lakhs, liabilities 5,20,000. Total asset 16 lakhs minus liabilities 5,20,000. Difference 10 lakhs 80,000. So now we have got total capitalized value of the firm and net asset. Now find the difference between these two. Goodwill is equal to total capitalized value of the business, how much? 15 lakhs. Minus net asset. Net asset is 10 lakh 80,000. What is the difference? 4 lakhs 20,000. Goodwill amount is 4 lakh 20 according to capitalization method. So far we have discussed three different methods of valuation of goodwill. First one is average profit method. Under that we have discussed two things, simple and weighted. And second one is super profit method. Under that we have discussed four different methods. And the last one is capitalization method. Hope you all understand this concept. Thank you.